I am Ashley Smith, and this is Eugene Alexander. I'm a Michigander who turned Texan, and now I'm at Ashley, CTX Realtor of Noble Group Realty. Um, Noble Group Realty is an amazing brokerage. We have our own funding, and we also have our own title. We're minority owned and veteran owned. I'm a second generational realtor with designations in military relocation professional, certificate in short sale and foreclosure. I graduated from Liberty University with an MBA, and I emphasized in marketing. I'm a graduate of Central Michigan University. I'm an 8-year Army veteran. I'm 5-star ranked on Facebook, and I'm looking to help with any residential or commercial needs, to include property management and those who are investors are ready to buy their first home. My niche is veterans and investors. Eugene Alexander here is the CEO of Five Hills Investor Group, LLC. He's also the founder of nonprofit organization Black Owned and Operated Movement. He has an amazing story from a local youth, an Army brat child, to a great businessman who has completed hundreds of real estate transactions. He does everything from climbing through windows to closing on homes, wearing a suit. He's the type of person you want on your side. It is my pleasure to introduce Mr. Eugene Alexander.
Thank you, Ashley. I appreciate you, man. It's our second one. We're ready to rock and roll.
Absolutely. And then also I have two special panelists. I have Chris of Credit Done Right. Credit Done Right is, we work very closely with Noble Group Realty, and they were on the local news for how awesome they are, and they're my preferred and recommended credit specialist. And then also you introduced Mr. Sean Smith.
Yeah, Sean Smith is a amazing person, a man of his word with high integrity. And when you're working with credit, there's confidential information that you're going to have to provide to someone. Mm-hmm. So when you're working with somebody and you're providing sensitive information, they need to be a person that you can trust.
Absolutely.
Honor their word and have a level of integrity. And with Sean, I can actually say that because my credit score went up almost 200 points by working with Sean.
Outstanding. So before we get started with our panelists, we're going to talk a little bit about credit and what we've done to actually improve our credit ourselves. So let's start with the basics. Why is credit important to you, Eugene?
Credit is important because it gives you additional leverage, especially with me being in real estate investing. When we go borrow money to flip houses or multifamilies, land, whatever it is, the first thing they want to know is about your credit.
Right, absolutely.
And to have an important credit history is important. Then also, it saves you money on interest as well. I know once upon a time, I was not aware about the importance of having a high credit score. So for example,
sorry, his mic fell down. We gotta get it together so you guys can hear what we're talking about.
Yes, for example, I went to the car dealership, traded in my car, and the dealership that I went to approved me, but they was approving me at a 12% credit score. I'm not credit score, but a 12%.
Hold your mic for a second. I'm gonna fix it.
Interest.
So go ahead and hold that.
All right, so they approved me for a 12% interest rate, but I was already approved through my credit union at a 4%. And when the representative said, by the time you get done paying off this loan, if I don't pay it off early,
right,
he says it's going to be $5,000 in interest. Now, if I was approved at the 12% interest rate through the dealership, that would be triple. So I would be paying $15,000 in interest at the term of the loan.
There you go.
All right, we're rocking and rolling.
Sorry about that, guys. Technology. So yeah, you literally save a lot of money by having good credit.
Right. So the purpose of the podcast, Ready, Fire, Aim, is to get African Americans and other minorities, small business owners, in the mindset of taking action. And as long as you have the right leadership, the right team, you're focused on the mission, and you have the proper systems in place, go ahead and take action, because Absolutely. You can learn through other people's mistakes. Now, I didn't have too much knowledge in regards to building credit, but I had a mentor my real estate mentor that taught me about building credit, and then I had Sean Smith here to help me in regards to removing derogatory items off of my credit report.
Okay, awesome. And we'll have Sean go into detail about that as well. Derogatory things on the credit. I know another method that you personally used was securing using a secured credit loan. Can you
Right.
go into detail about that and how that helped?
All right. So basically, what I did with the secure loan is that I went to three different credit unions. All
Okay.
right. So I went to Credit Union A, Credit Union B, and Credit Union C.
Mm-hmm.
I took $500 and borrowed against my own money.
Mm-hmm.
All right. So I put $500 in Credit Union A, and I said I want my money back. Then I went to Credit Union B, said I want my money back. And then I
Okay.
opened up another account, and then I went to Credit Union C and said I want my money back.
Okay.
And then when it came to that first payment, now my payment is like $90. So I did the same thing again. I went, made my first payment for $90, pulled it back, second one, pulled it back, third one, and pulled it back. Does that make sense?
So essentially, you took $500, went to a credit union, opened your secured loan.
Mm,
The same day, withdrew the money, went to credit union B, same thing, put the money into the account,
Mhm.
withdrew it, went to credit union C,
mm,
and then when it was time to pay, which is going to be around $90 roughly with interest,
mm,
you did the same exact actions, put the money in A, withdrew, um, credit union B, withdrew the money, then put the money in credit union C
right.
and withdrew the money. What was the benefit of that?
Well, one, you're building a relationship with the credit union.
Okay.
So when I went to get a new car, I was already within their system. They see I've been working on building my credit, so they already see that. And then B, when you pay off your loan, you're paying off three loans instead of one loan. So 9 out of 10, the traditional person, what they're going to do when they're building their credit up is they're going to do that with one bank.
Okay.
But when you do it with three banks, it gives you it you're paying it off on your credit report, and it shows three um, payments, and it helps boost it.
So you get three paid off accounts.
Three paid off accounts
within literally 6 months.
Correct.
Wow, that's pretty awesome. I know one method I used when I was a young soldier in the Army. I joined very young. I was only 20. And so at 20, you don't have a lot of credit, and limit of credit is important. I used a secured credit card. So the credit union gave me a $300 balance. So I gave them $300 to use. And then I kept my balance very low. I would buy something really small. Less than $50 was really my budget. And I would pay it every month. And my credit went up to over 700 points using that method as well. Because I was in Korea. In 8 years, I traveled 9 places. So, I was really always on the go. So that was a very helpful method for me to use as well.
So did you maintain like a minimum balance, or did you pay it off every time?
I paid it off every time. I didn't keep a balance on mine because I was too afraid.
Right.
Because I was so young, I didn't want to mess up credit. And plus, I had a security clearance, and my security clearance was based on me having good credit.
Right.
So I didn't want to play around too much with that. I had goals, and it worked out very well for me. So yeah, that was a so we both use secured methods, and that secured methods is really good when you don't have established credit.
Right.
You're very young. And I think you also had something else you used as well.
Yeah, I did a secured credit card too.
You did the secured credit card. And what about having someone help you with if you don't have established credit?
Yeah, a cosigner. I had a cosigner.
Mm-hmm. And how did that work out for you?
Well, I went to the dealership and bought a car, and I had a co-signer. And then when I maintained that positive payment history, and on top of the secure credit card, the secure loans, when I traded it in, I no longer needed that co-signer.
Okay.
And now, with me being a real estate investing, and I go to like hard money lenders or private money people that when I need money, and they're looking at my credit score, and guess what?
What?
I can get the money.
Guys, don't let Eugene play with you. He has a brand new Mercedes with a drop top, drop top in it. So it works. It really does. And both of us went through, credit challenges, being young and having a lot of debt from college.
Right.
I'm from Michigan, so in 2008, we had bad times where the economy was just terrible. So a lot of people lived off credit.
Mm.
So, 10 years later, a lot of my friends are just recovering from the experience we had. So it's very important to take your credit serious and start as young as possible. Matter of fact, I know people who start while their kids are 12 or 13. They'll give them a secure credit card, or they'll actually be a co-signer for their children's credit card.
Hmm.
You have to be responsible with that method. Please don't have bills in your children's name and ruin their credit, which we see as realtors and real estate investors. But I mean, the earlier we start, the better. You just please, if you know you're not responsible with your own credit, don't ruin the children. We're trying to build generational wealth.
Mm.
So yeah, I've seen that work and it works very well.
Yeah, you could call in and I could add you as an authorized user or
Hmm.
add my children. I don't have any kids, but if I did, I could add them as an authorized user. And while I'm building my credit and establishing and maintaining my credit, is building their credit up at the same time.
Absolutely. And so, Chris, I'm going to get you started. I'm going to mute you here. And the cool thing about Chris is that she has loan mortgage experience
Mm.
as well as experience as a credit repair specialist. So she knows how to get you a loan as well as how to make sure we fix your credit, which is wonderful. And so I'm going to get you started. And then I'm also going to get this. We have slides here as well. So I think, can you guys see the slides?
No.
Let me see. You're unmuted, right, Chris?
Yes, can you hear me?
Yes, I can hear you. And then
Okay.
also, let me make sure we get these slides going. I got to share my screen. I'm new to Zoom, but I'm getting there. Okay, here we go.
Oh. All right. Hello, I'm Chris Rodriguez, and like she said, I'm a Credit Done Right. I have worked with Credit Done Right for over 10 years. I've been a mortgage loan officer for 18 years, and Credit Done Right was my go-to guy. Damon Green has saved so many deals and helped so many people get into homes. He's always been my go-to person. And then when I had the opportunity to come work with him, I took it because I love his integrity. I love his company. I love what he is able to do. And I was excited to be a part of it. So today I'm going to talk with you guys really quick about what makes a credit score, where does credit scores come from, and how that kind of helps you so you have that knowledge as you're trying to build. So your credit scores, there's several different credit score models out there, many models. Mortgage companies use a specific model, car companies use a specific model, credit card companies use a specific model. So there's a whole bunch of credit models out there, and just depending on what you're going for, each model will score differently. Sometimes when you're online and you go to like TransUnion or Experian, Credit Karma, and some of those places, you're going to be seeing what's called a Vantage score. It's not really your credit score. It's just a version of your credit score, but maybe not the same version that a mortgage company would be using, or a car company or credit card company. And then also, when you go to get a mortgage, we use what's called a FICO score. And so your FICO score, but there's several versions of that too. And so each mortgage company, they use a specific FICO score version. So when you're out there looking online and you're going to Credit Karma and you're getting different things, you're going to get different kind of credit scores. So don't always be shocked so much, like if you go to buy a car and they tell you your credit score is this, but you saw it online, it was actually 700. It's just because there's so many credit score models out there, not everybody uses the same one, and each company uses their own models. So let's talk about the next thing, what makes up a credit score. So the next slide is going to break it down for you. What actually makes up a credit score? So you see the pie chart, and it's broken into different things. So your biggest part of your credit score is your payment history. That's 35% of your credit score. So it's how you paid your bills. Have you paid them on time? Do you have good pay history? So a lot of times when you're trying to build credit and you have no credit whatsoever, it's going to take you 6 months to get a credit score because they're going to wait to see how you pay and what your pay history is before they actually give you a score. So just keep that in mind. And late payments and anything like that is all in your payment history. Then the next part is the amount you owe. How much do you owe on each account and how much is your credit limit? So earlier she was talking about keeping her credit limit very, very low. She got her secure card, but she kept it very low. That was perfect. That is what built her credit. So that is 30% of your credit score. So what credit companies really want to see, believe it or not, to give you higher scores, is you using 30% or less of your available limit. So just quick, easy, if you have a $100 limit, you want to keep that card below $30 or less to be good. But 10% or less, so under $10, they give you higher credit scores. So when we're working on somebody's credit repair, the first thing I'm going to tell them to do is pay down their credit cards below 10% of the balance. And that's going to help boost that credit score. So the other part of your credit score is credit history. How long have you had each account? You can open an account, especially a credit card, if you have no credit cards. You can open a credit card account and it'll boost your score. However, you get another boost 30 days when you've had it 90 days and then a year. The longer you have a trade line, the higher your credit score is going to go. Mm-hmm. So when you're trying to build credit, you don't want, it's kind of counterproductive to go get payday loans and then pay them off every 3 months and stuff, because it hurts on your credit history, how long you've actually owned that account. So the longer the account is in your name and has a good pay history, the higher your credit score will go. 10% of your credit score is new credit, how many credit requests you have. So when you get inquiries or you have somebody pull your credit, that can affect you by 10%. And then your type of credit is 10%. So they really want to see you have a good credit mix. So credit card, number one, credit card. Number two, loan. So student loans work, auto loans work, secured loans work, like you guys were talking about earlier. And then the big one would be a mortgage. So that's a really good credit mix. So they want to see you have everything. So the goal here is to get all three of those, to get those high credit scores. So I want to show you really quick, because I just showed you this pie chart on percentage. But what does percentage mean in actual points? So the next slide is going to show that to you. And it's kind of different. Are you there?
Yeah, I'm coming with the slide. I got two screens. There we go.
Oh, I'm so sorry. There we go. Okay. So a perfect credit score is 850. I, in my 18 years, have never seen an 850, 830, 840, haven't seen an 850. But this screen just shows you quickly how 35% is actually 297.5 points. That's a lot of points that are up for grab in that 35% of your payment history. So right. That's why when you get a late payment or you have a collection, that's how you see those credit scores drop so dramatically, because it's 297 points are up for grab there. The other is amount you owed, which is 255 points. So same thing, when you max out that credit card and they start looking at your balance, your debt to credit line ratio, you're losing points up to 255 for that. Type of credit is actually 85 points. New credit, when you open new trade lines over and over again, that's why sometimes those payday loans aren't so good, because you keep opening new trade lines, because like you'll get to like 3 or 4 months, 5 months in it, and they'll say, hey, you want to refinance this and get more money? Sure. You think that that's helping your credit, but they're closing one of the old one and starting a new one. So it's actually hurting your credit. So you want a long period of credit on it. And then 15% is credit history, which is 127 points. So all of those, if you scored perfectly, you would have an 850 point credit score. So that is how your score is generated. That is how the bureaus come up with credit scores. And that's how sometimes you think you're doing something. Oh, I paid off my car. Well, believe it or not, when you pay off your car, you're going to drop a few points because you paid off a long-standing account, and now that affected the type of credit you have because you no longer have that account open. So there's lots of little things that affect your credit score, and this just kind of gave you a quick rundown on that.
Thank you so much.
You know what?
And then we're definitely going to come back with some questions for you.
Okay.
Okay, so we wait till the end for the question.
Yeah, we're going to wait to the end, and then we're
Okay.
going to let Mr. Sean Smith go.
All right.
So, Sean, I'm about to unmute you, and then I'm going to mute you, Miss Chris. Okay. Can't hear you, Mr. Sean.
There we go. Can you
There
hear me
we
now?
go.
Can you hear me?
Now we can
What's
hear
going
you
on, Sean?
perfect.
Hey, how's it going?
Hey, appreciate you coming in, man.
Hey, no problem. Hey, first of all, I want to thank the guests who had invited me here, Ashley and Eugene and Christine have all given excellent information on credit repair and how credit works. I'm just going to add my 2 cents in on how I use credit and how I help people utilize their credit to accomplish any goals that they might have, whether that's purchasing a new vehicle, getting new credit cards, or ultimately purchasing a new home, which is my favorite thing that I like to do with my credit repair business. So I'll give you a little bit of history about me and where I come from. I started in the mortgage industry about 16 years ago. So I've been a mortgage professional for the past 16 years. I've had, probably like Christine, every job that is in the mortgage industry I have had. I've been a loan officer. I've been a underwriter. Well, I'm an underwriter now. I've been a loan officer. I've been a processor. I've been an underwriter. And like I said, for the past 6 years, I've been an underwriter, a mortgage loan underwriter for a company called PennyMac, which is the third largest lender in the nation now. Very happy to work with them, a great company. So from 8 to 5, my job is underwriting home mortgage loans. So I do that every day from 8 to 5. Due to COVID, of course, I'm at home. So, and I enjoy it. I enjoy putting people in new homes. I try to help people who are on the edge by giving them the benefit of the doubt and helping them accomplish their home ownership goals. So, but how I got started in the business or in the credit repair business was I had told you that I was a loan officer, a mortgage loan officer. I actually opened up my own brokerage shop about 12 years ago. It was also called First Choice Financial. And I worked with predominantly urban or Black African-American individuals on attaining home ownership. And I was pretty successful at it, did really well. But I also ran into a lot of roadblocks credit-wise. I had a lot of individuals that would come to me and they would have great employment. They'd have the money for the down payment, but the credit part was a roadblock. And I think it ties into what we're talking about today about how to build generational wealth, because I think a lot of African Americans like myself can remember their parents and how they also had credit struggle problems. So I can remember running from the guy from Rent-A-Center and trying to hide from him. So credit when my parents, they just did not have the ability to obtain credit. It wasn't taught to them from, an adolescence to pre-adult to adulthood. It just wasn't something that was part of their matriculation into an adulthood. It wasn't that important. My parents paid everything in cash. That's how they survived. And I think the only credit thing that I ever saw come to our house was something from Finger Hut or something like that. That was like the only credit that was ever, you know, that was ever in our house. So it's something that's not taught. So you have to learn that skill. And unfortunately, like I said, it among the African American community, it sometimes is a roadblock to home ownership because they don't have that the foundation or the building blocks from a young age to know how important credit is going to be ultimately in your life. And I was the same way. I can remember, of course, we all start off on an even plane. We all start off on a zero with a zero credit score. And it's how you build that credit score going forward determines, what kind of credit life or credit experience you're going to have. Well, me not knowing how important credit was, I ruined my credit at a very early age. I was probably 22 when I went to or 21, 22 when I went to college. They offered me a credit card. I signed up for it. They gave it to me. It had like a $400, $500 limit. I went out and really spent it all really fast and didn't even think about paying it back. And it totally ruined my credit. And then once it was ruined, once I had that that bad mark on my credit, I really didn't care about any other bill that came in. I said, well, my credit's already shot. So, why would I care about anything else that's, these collection letters and things like that? Why would I care? So that has haunted me. That haunted me for a long, long time until finally I decided that I needed to do something about it. So I learned everything I possibly could about credit, credit repair, and how to improve your credit score. And I took it really, really to heart. And I used that information that I garnered to help my clients and my brokerage business. And it suddenly became more profitable than my actual mortgage activities. And I went, full time into credit repair. So I've been doing credit repair for a long, long time. I have a pretty good success rate, as Eugene can tell you, or is vouched for. And I try to always, as Eugene will tell you, expound on how important credit will be going forward. You think about credit and you think about how you use it. Yeah, you use it to get credit cards, you use it to buy a house, you use it to buy the car that you want. But people check your credit if you're applying for insurance. It can help determine what rate you're going to get on your car insurance or your home insurance. Mm-hmm. People check your credit all the time now when you apply for a new career. When you apply for a job, your credit is going to be checked. They want to make sure that the people that they're hiring are, fiduciary good people that pay their bills on time.
John, it's funny you say that because when I graduated, and I was telling you, the economy 2008 in Michigan was terrible, and most of us were from Detroit or Pontiac or Flint, and a lot of us were first generational college students. A lot of my friends couldn't get jobs because of bad credit. It was detrimental to them.
Absolutely. And that's the same way that it is with ownership. Credit is so important in your daily life that it's hard to realize if you're not taught that at an early age. Mm-hmm. Most of my friends now know, and some of my colleagues that I work with, they start their children, just like Christina or Eugene had indicated, they start their children early off with credit. They'll add them as a authorized user on their credit card that they've had for 25 years. And boom, so that kid gets that head start right from the gate where he's got a 700 to 750 credit score just by being an authorized user on the parent's account. And then it's taught to them that how important credit is. And I think sometimes in the minority community, that trait or that importance is not pushed as hard as it is in other communities. And that's why we have, I can tell you just from my own experience that 70% of my clients are minority clients. And that's just the bare hard truth. And you can blame it on whatever you want to blame it on, but that's what it is. I blame it, like I said, or point the direction in education, that we're just not educated early. So I think this kind of plays into generational wealth and how to build it. I tell people, and just so you know, you want to talk about how important credit is and how it affects your daily life. I equate a 700 credit score with having about $100,000 in the bank.
Mm.
Okay. So if you have a 700 credit score, you probably can get a car up to about 30,000 or even more. You may be able to get a couple loans for 20,000 or more. You may be able to get, you definitely get a home loan, with a 700 credit score. So I equate that to having about 700 or about $100,000 in the bank. And as we move up the scale, a 750 would get you, maybe 250,000. Now, if you have 800, it's unlimited. I mean, you're pretty much can pick and choose what rate you want and what you want to do with it and how much money you want to borrow. And there's not to be any questions as long as you have the ability to repay back a loan. If you've got, a 740 or above credit score, more than likely you're going to be approved for anything that you want. So that's how important that's how important credit is. And I want to just reiterate that point with the audience that you should take care of it. Now, let's go into the point let's go into the fact that maybe you don't have great credit right now and you're wondering, what can I do? Well, Christina has told you how credit works, how it's calculated. I'm sure she's great. Is it a credit repair business that you work correct? So she'd be an excellent resource for that, to show you the ins and outs of how to get new credit and get things removed from your credit. I also have, like I said, a credit repair business. I've been in the business of credit repair for over 12 years. I have a very, very good track record of removing items from credit reports, taking things off as far as collections, foreclosures, bankruptcies, repossessions, charge-offs. These are all negative things that affect your credit in a negative way. And they can stay on your credit report up to 7 years. Bankruptcies and foreclosures, which are listed as which are called public records, can stay up to 10 years on your credit report. And just to end that confusion, Christina had indicated how important payment history is and how bad one missed payment can affect your credit score. Okay, that one missed payment stays on your credit report for 7 years from the date that you were late. So you make one mistake on your credit of missing a payment on a credit card or an auto loan, and that is on there for people to see for up to 7 years from the date of delinquency, which is the date that you were actually delinquent. So, for instance, if you had a late payment in September of 2013, well, if someone pulls your credit, they can still see that it's 2020, and they can still see that late payment that you were late for back in 2013. Okay, so they're always going to be. It's imperative that you pay your bills on time, and that you limit your access to credit, which was another fine point that Christine brought up, which is what I call utilization. Okay, what utilization is, it's how you utilize your credit, specifically your credit cards. Credit cards play a very, very, very important role on credit in your score. And I'll make it very simple for you. If you have no one has this limit, but I'm just trying to make it very simple. You want to stay under 30% is good, but 10% is ideal. Okay. So if you had a credit card and it had $100 limit on it, that was your credit limit. That's all you could access was $100. And you go out and you get that card and you go out and you buy something that costs $99. Okay. You're now at what the credit people refer to as 99% utilization. That then sends a red flag to the credit bureau. This person is a new credit risk. We need to lower his score because he must be living on the edge, or she must be living on the edge because she's trying to access as much credit as she possibly can. Okay. So you're at 99% credit utilization, your score is going to plummet, right?
Okay.
The way to get around that is you pay that back down, right? The minute you pay that credit card back down to $10 or $8, boom, your score goes right back up. So it works like that continuously month after month. I have seen people where they ride the roller coaster. One month it's, their score is 750, then the next month their score is 720, then the next month they're 750. It's all because of how they use their credit. So Christina brought up an excellent point. The first thing that I tell all my clients, pay down your credit cards. If you got them open, pay them down. That's going to be the biggest jump in our credit score. Regardless of what I do, paying down those credit cards are going to help you tremendously, okay? The second thing that I look at is collection accounts. Collection accounts are the devil to credit, okay? So if you've got a lot of collection accounts, you need to either reach out to me or Christina or your credit repair person and have them remove those accounts, okay? That's going to also help your credit score, okay? Removing collection accounts are going to help your credit score. It's bare basics, okay? Another thing that you might see on your credit report are called charge-offs. What charge-offs are when you've had an account open and the creditor has given up on trying to recover that delinquent account. So they smack on what's called a charge-off to your account, which also is going to be very detrimental to your score. Okay? It's going to hurt your score is going to plummet if you get a charge-off. And I think everybody knows what a repossession is. That's where the people come back and they actually take back the property that is secured by your loan. That's going to be detrimental. Okay? Bankruptcy is going to be detrimental. Foreclosure is going to be disastrous. Okay? So you never want to find yourself in any of those 5 categories: repossessions, charge-offs, bankruptcies, foreclosures, or collections. Okay? If you do find yourself in that, then you need to reach out to a credit repair specialist and have them attempt to remove those. Now, there are tricks of the trade that I'm sure Christina is familiar with, that I'm familiar with, that let you kind of wind the difficult road around getting those things done. I will also tell you, as a credit repair specialist, and I'm sure Christina would agree, you can do that totally on your own. That's something that you can do by yourself without the help of a credit repair specialist. And you're saying, Sean, why would you tell me that? Jesus, you're killing your business right there. If I could do it my own, what do I need you for? Well, what you need me for is the intricacies of doing it. The letters that I have, the templates that I use, the follow through that I have. So that's what you would call either me or Christine for, is our expertise in navigating the system and getting things done where you don't have to bother with it. Because as Christine can tell you, it can be a very tedious job. There's paperwork that has to be filed. It has to be filed correctly. It has to have the right information on it. Or the only thing that the credit bureaus are phenomenal and great at sending you their form letter back saying that you did not provide the correct information. Therefore, there is nothing we can do. Okay? They are great at that. That is their craft work. And they send those out like clockwork. So that is why you would reach out to a credit specialist like me or Christine, because of the expertise that we'll be able to provide, the hassle-free that it will be to you. And I'm not sure what Christina's price is, but believe me, most credit repair people are cost friendly. So getting those things off your credit report at a cost of a couple $400-500 or whatever they charge is beneficial to you in the long run.
Okay, thank you so much.
No problem.
So I have both of you guys unblocked so you can speak, and we're gonna open it up for questions and answers. Is there anything else you guys would like to say before we get to that point? No, you said what you had to say, huh? Okay, I'm gonna stop sharing. Okay, I have um some questions. One, is credit repair a scam?
You want me to answer that? I can answer that if you want.
Go for it.
Okay. Again, like I told you before, you can do everything that you need to do to repair credit on your own. What you're paying a credit repair specialist for, again, is the intricacies and the expertise of maneuvering through the system. It is a very difficult system to get things removed if you do not know the ins and outs of credit repair. The bureaus are set up to deny and send back or stifle any credit correction that you try to attempt. I will tell you how credit repair works in general terms. How if you were going to do it yourself, what would happen? Let's say you owe Capital One. You owe Capital One, and they put a collection on your account. So now you've got, not only in your trade line, you've got Capital One listing you as a bad bet. I'm sorry, my Alexa, stop. Sorry.
Alexa want to fix her credit too.
Yeah. Alexa wants her credit fixed evidently too. So, again, so I'll tell you how a typical credit credit repair transaction works. So, if you were going to do it yourself, you would call you had an old Capital One on a bad debt. Not only is that now showing up on your trade line from Capital One, but now it's in collection. So you've got two bad things happening at once. You've got the Capital One trade line account listing you as charged off, and then you've got a collection account below in your public records listing it as a collection account. So you call Equifax, TransUnion, and Experian, and you say, "Hey, this is not my account," or "I don't know where this came from," or "This is just not mine. Please take it off." And you submit a request to them, just like that. You can do that, like I said, right over the phone. So many people think that the credit bureau themselves are going to do an investigation. They're going to we're going to investigate this. This person just came in and said this is not their account. We need to start working on this, see what the heck's going on here. No, that is not how it works at all. So what would happen is you put in that request for to get that item deleted. But whatever reason you use, not mine, I have no knowledge of this account, it was fraudulent, whatever. The credit bureau receives that request from you. They then send out through what's called an OSCAR report or an e-report electronically to Capital One. And it says, "Hey, Sean Smith has said this is not his account. He does not know where it came from. He wants it removed from his credit." That's all the credit bureau is going to do. They're not going to do an investigation, although they're going to send you out a piece of paper that says, "We are investigating this dispute and we'll have an answer for you back in 30 days. Believe me, there's no investigating going on by the credit bureau. The only thing they're going to do is they're going to send that information over to your creditor, in this case, Capital One, and say, "Hey, Capital One, Sean said that this is not his account. He doesn't know where it came from. It shouldn't be on his report. What do you got to say about that?" Capital One's going to say, "Well, we looked at it. We saw that he is one of our he is one of our customers. The address on your credit report matches the address that's inside our database. The balance is correct. The payment history is correct. So this is our customer." Then they're going to send that information through the same system called OSCAR, eOSCAR, back to the credit bureau as validated. The credit bureau is then going to send you out a nice little form letter that says, we contacted the creditor on your behalf, and the creditor said, this is your account. So this account will remain on your credit report unchanged. In fact, the credit bureau, not only did they say that it was your account, but they updated it and added some more late payments on it for you because you wanted to be Joe Schmo and investigate it. So they did do a little bit of investigating, and now they've actually made it worse for you. So that is why you contact someone like myself or Christine for credit repair. We know what it takes to get things removed or changed. Christine,
Wow.
you want to add into that?
I do. I'm going to say, yes, there is fraud out there on credit repair. And you have to know the company you're working with. Because a lot of companies don't do an in-depth. They just do what he just talked about. And they may send 20 million letters to the bureau. And finally, Capital One says, fine, I don't have time to answer this, take it off. But then 2 months later, Capital One gets caught back up and they put it right back on. So that was not credit repair. You paid somebody to do something for you that they didn't really do anything for you. So it's very, very important to know, to have a good reputable company, because there is stuff out there that is not. They just want to take your money. A lot of the companies charge you a monthly fee, and they won't tell you that they're going to keep you for at least a year, because that's the only way they're going to make their money, is if they keep you for a whole year. And so you just got to kind of know who to go to. So I highly recommend, before you start credit repair, you ask somebody that has had experience in it and knows for sure what, and you want a company that's going to guarantee the results. Somebody that's going to work with you until you get the result that you want. So very important.
Thank you, guys.
Really
Another
quick on that.
question-
Can I add something on that really quick?
Oh yeah, go for it, please.
Yeah, so Christine brought up an excellent point. You always want to find somebody that's reputable. Eugene could tell you that my company offers a full money back guarantee. If Eugene wasn't happy with the results, I would have given his money completely back to him. He's aware of that. He knew that from the first call. The second thing is, Eugene had customers that he said, Sean, I'm going to send some more people to you right away. I've got plenty of people. I told Eugene, wait till I'm finished with you first. You'll be my biggest mouthpiece once I'm done with you. So I didn't want to take on any other his clients that he was going to refer to me until I had completed his work.
All right, I like that. Eugene spoke highly of you. Credit Done Right has worked wonders with our Noble Group clients as well. So both of you are both reputable. And the next question, you want to read it?
The next question is, as a felon or having a criminal record, can I approve my credit score? As a felon, can I purchase a home with a traditional loan?
Yes. As long as we have a credit score. As a mortgage loan officer, I've never pulled a felon report, ever. That doesn't go into you buying a home. In fact, I've had people that had been incarcerated, and that was their reason for not having a long enough job time history, things like that. So yes, that does not stop you from buying a house in any way. Your credit score would, so that would be the biggest thing, is to improve your credit score. But as far as I know, that's not part of your credit report, is your felon report, is your felony or anything like that. It's just your pay history.
No. And to piggyback on what she's saying, she's exactly right. There are three things that determine whether or not you can determine a home or purchase a home. And I do this for a living every day. The three things are, and I call them the 3 C's. They are collateral, which means the 3 C's are collateral, which means, is the home that you're trying to purchase worth what we're going to loan you? And that's why you have an appraisal. So that's the first C. The second C is capacity. Do you have the capacity to repay that? In other words, show me your pay stubs or show me your tax return. Show me that you have the ability to make this monthly payment along with the rest of your debts. Okay. The third thing is credit. Show me that you're creditworthy. Show me that I can trust you. So if you meet those 3 requirements, that's all you need to purchase a home. I like to tell people that purchasing a home is more easier than trying to rent a house, because there's no criminal history involved whatsoever in the process of purchasing a home. The only thing that that you can be denied for as far as criminality is if you run a marijuana operating business. If that's your source of income, then you're not going to be approved because the federal government owns two companies called Freddie Mac and Fannie Mae, who's going to buy the loans, and they don't recognize as on a federal level the marijuana growing business. The marijuana is an illegal activity still with the Fed, so they treat it as such. That's the only thing that disqualifies you. I don't care what crime you committed or drug offenses, whatever it is, you cannot be denied based on that. It's not even checked. It's not looked at. It's not checked. The three things, like I said, credit, collateral, and capacity to repay.
Okay. You had anything else to add?
Man, that's amazing, because it's a lot of people out there that's just not aware in regards to the options that they have available to them.
Mm-hmm.
Also, I wanted to bring something to your attention. A lot of people, including myself at one point in time, when I had the lack of knowledge, assumed that things automatically fall off your credit report after 7 or 10 years. I know we spoke about bankruptcy, we spoke about repossessions. Does that automatically fall off your credit report?
It depends. Some things do, and some things stay there. The credit bureaus, I like to tell people, the credit bureau is not going to do you a favor. You know, they're not going to automatically would just take things off because they have a time limit, or they're supposed to. But again, it's not automatic. I've seen things that have been on people's credit for 14, 15 years.
Wow. Miss Chris, do you have something you would like to add?
No, that's the same thing. And also, they like to play this little trick where that maybe that original credit is going to fall off, and so they sell it to a collection company to kind of redo it again.
Mm-hmm.
And that through credit repair, of course, can be taken off as well, because the time frame from the date of the last activity, and you can start disputing all that, and you can get that off as well. But that is kind of a little trick that you will see. And believe it or not, collection companies monitor your credit report. And when they start seeing you doing good, and if they even see possibly a mortgage inquiry on there or a car inquiry, they try to put their junk back on there that's old and can't collect, because they know it will stop you from doing what you want, and maybe you'll pay them. So yeah, there's a lot of kind of ugly stuff that goes on, and nobody polices the credit bureaus. Nobody tells them, nobody checks on them and making sure that they're doing it right. You as an individual have to monitor your credit, and then, take care of what they're not reporting correctly.
All right. Now, if I wanted to monitor my credit, what do I do to monitor my credit on a monthly or annual basis to monitor my credit?
Well, everyone is entitled to a free credit report once a year. Now with COVID going on, they're giving them out a whole lot more than once a year, but freecreditreport.com, freecreditreport.com. You can physically go there every year and get a copy of your free credit report to see what's on there. And I do recommend you do that, especially, you talked a little bit earlier about your children. You need to check theirs as well, because that is one of the biggest frauds out there, is using minor social security cards, stealing them because no one's checking their credit. No one's looking at what's going on those social security numbers, because your children are not applying for houses and anything like that. So you do want to monitor all of that once a year at least.
All right. Thank you. Another question I have, and this one is for Chris, and the shared secure loan. Now, I know I spoke about doing it every 6 months, building credit. What do you recommend? I know you said it's short, and when you pay it off, it can affect you.
We always recommend
to do it for 9 months, a year. What do you recommend on that?
We always recommend a 12, because you want that longevity in the longer you have. Remember, part of that credit score goes to the length of time for credit history. So the longer the account you have, so we always recommend they do it at least 12 months.
Oh,
At least 12 months. Yeah.
All right, all
At
right.
least 12 months.
All right, so the building credit and credit dispute, definitely this is delayed gratification, not an overnight process, but the results will be there and it's definitely worth the investment. Another question that I have for Chris and as well, Sean, when you remove an item off the credit report, does that come back? I know we spoke about if you do it yourself, it could come back, but Chris and Sean, if it does come back, do you guaranteed that you could get that removed back? Has it ever came back? What are some real life, real world scenarios that you had in regards to that? Now, I know me personally working with Sean, I have not had anything come back on my credit report once it has been removed. But Sean and Chris, I would like to open up the question for that and answer.
Well,
Yeah.
I guess the way, I don't know the way Chris removes or how she removes items. That's proprietary to her. So I don't know her process. But with my process, it is almost a guarantee that it will not come back, as you can allude to. I can never say never, because collection agencies are very clever and they're somewhat connected. Like a group might own 4 different collection agencies, and I remove it from a ABC collection, and then it gets off, and then they sell it to DEF, and DEF throws it right back on there. That's one of their clever tricks that they use, which we ultimately take right back off. I offer, like I said, I offer a full guarantee for 6 months after your process is done, that if anything that I removed comes back on your credit during that 6-month period, we will remove it absolutely free at no charge to the customer.
Yeah, that's exactly how we work. What comes off, I've not seen anything come back on, but just like you said, it gets sold sometimes to a different one. But yes, we do guarantee our work as well. And that's why you want reputable companies that say, you know what, we're going to take care of it.
Right, right. Yeah, this is amazing because I know a lot of people wanted that information.
Absolutely.
And reputable. That's, me and Ashley are really big about being reputable. That's why we're revealable and transparent ourselves.
Mhm.
I know I was about to go with somebody I seen on Facebook, and it was going pretty hard. I'm not
Yeah.
going to say no names. I'm going to keep it
Please
private.
don't say any names.
No name dropping. But I did a quick Google, and I see some things that came up on Google. I'm like, wow, I was going to provide you my social security number,
Right.
and there was some personal things that was right when you typed the name on the Google, pop right up, and I was like, I don't give a fuck. Excuse my French. I don't care if everybody, 1,000 people's commenting. I would never provide you that type of security or personal information like that.
Right.
So once again, Sean did a great job with me, and I know you said Chris did a great job with.
Oh yeah, I love what they offer our clients. Some people, some of the builders, once they know we're working with those guys, credit done right, they'll allow us to start the process of allowing them to get the home. And Chris, you could verify that as well, right?
Yes, ma'am. Our process is usually anywhere from 3 to 6 months. So that's why the builders are able to start building your house, your buyer, you're under contract, and that way we can get that through for you and be ready by the time your house is built.
Okay, I have a question. And make sure you're speaking in the mic.
All right.
I've heard of trade lines. I have no idea what they are. Can you please go into detail about that?
Sure. We always have our jargon and it doesn't always translate very well. Sorry about that. A trade line is just a line of credit. So Capital One, your credit card, is a trade line.
Okay.
Your auto loan with, Chrysler Capital, that's a trade line. So every one of those items of credit that you have are called a trade line.
Okay. Do you use that? Because some credit repair specialists use trade lines as their pitch. Is this something that you guys use for your business?
I do not. I don't offer trade lines because trade lines are an artificial inflation of your credit report. And what I mean by artificially inflated is you're going to pay a lot of money for a trade line. And it's only going to, and most of the time the companies that are going to, or the companies that are providing it are only going to allow that trade line to be on your report for 3 to 4 months, unless you pay an additional fee to keep it on there even longer.
Okay.
So the only time that you would use a trade line addition is if you were, let's say you're going to go purchase a home and you needed an immediate score boost and someone offered to let you piggyback on a trade line, then yeah, that might help you out, but it's only going to be for the trade line companies that I know. That's only going to be for a 2 to 3 month period. And the minute they remove that, your score is going to drop right back down to where it was. So it's not a permanent fix. It's temporary. It's very costly. Most trade lines with the people that I work with are anywhere from $800 to $2,000, and they might give you a 40 to 50 point boost. Now, the reason they give you that boost is because what a trade line is going to do for you is it's going to add something like a credit card. And Christine had went over what builds your credit. So when you add a trade line that's been in use for a long time, 20, 30 years, a trade line like that you add to your credit report that also has a great payment history, you're going to get that boost. There's no doubt about it. It's a trade line, but you're going to pay about $2,000 for that trade line that they're going to add, and it's only going to be there for 2 or 3 months unless you renew it and pay another $2,000 to $3,000. So it's kind of like an artificial payment boost or increase. You're better off just going through straight credit repair and then building your own credit. It doesn't take a very, very long time once you get the negative items off and starting adding to your score and paying your bills on time, making sure your utilization is low. It doesn't take a very, very long time to get a good credit score. And what I consider, a fair credit score would be anything 660, 680 is fair. 700 to 720 is good. Anything over 720 in the 740 range, you're about as high as you can go. Like Christine had alluded to, she's never seen an 850 score. I pull credit reports every single day, sometimes 10 to 12 a day. I probably ran across, I think, one 850 in the 16 years that I've been in the mortgage business. And the reason that person's score was 850 was because they were very old. They were probably, I think, 67, 68 years old. They had trade lines that were 25, 30 years old. I mean, it was like they started the first day MasterCard came out, they got one, and they made payments on it continuously for that time. They've never been late. Their utilization was at about 1%. So they kept their credit card balances very low. They had very, very little inquiries. They weren't applying for a lot of credit. And it was like discovering the Holy Grail, because you just don't see an 850 credit score very often. I've seen, like she said, 838, 837, and they all have those same characteristics. The problem, my customers ask me, the main question the customer asks me when they come to me with bad credit is, what is my credit score going to be when you're done, Sean? I can't tell them that. I have to be transparent and say, hey, all I can promise you is I'm going to remove as many negative items as I can. I'm not going to touch the good stuff that's on your credit, because that's going to be what's going to reflect your new credit score. Okay. Because again, I don't work with trade lines. I don't add trade lines. I think they're a waste of time and a waste of your money. I also tell them, it took you a long time to rack up this great score that you have. So it's a process. When we're done, you might be at 680. But if you do what I say and continue to pay your bills on time, keep your credit utilization down, every month you're going to see your score creeping up. So it's a process. It didn't take you 30 days to wreck your credit like this, and it's not going to be a 30-day repair either. It's a process, but I'm going to give you the foundation and the building blocks to start you where you need to be, so you can at least go out and obtain new credit and have a new, fresh outlook on credit.
Amazing. Christopher Chappell on Facebook, he says, hey, brother Alexander, are you using this credit service? Yes, I am, Christopher. All right. And then Errol Harden says, thank you for the presentation and the event. So thank you, Chris, for being here. Thank you, Sean, for being here as well. We definitely appreciate it.
Absolutely.
This is the Ready Fire Aim podcast. Give us a like, a comment, and share right now.
Absolutely.
Share this on Facebook, like, and comment.
And then
Thank you.
also, I think I have one last question. Is there any benefit of paying items off early? Like instead of taking the 12 months, maybe paying it early 6 months in advance. Does that affect your credit?
When you pay off a longstanding account and that account closes, you will see a little bit of a drop in your credit score because you paid off a longstanding account. So for the immediate future, it hurts you just a little bit. So if you were trying to buy a house in the next 3 to 5 months, I would keep that longer. There are times where you need to pay off an account to qualify for a home.
Right.
And I'm sure Sean would tell you the same thing. We would instruct you to do that at the end of the process, not at the beginning. So after we've already had the credit score that we need, we already ran the credit report that we are using for the mortgage qualification. And at that point, then we could pay off a debt or something like that if we had to. But I would not, if your short-term goal is to buy a house, I would not pay off things without being told to do so, just because sometimes it can affect your credit.
Okay, perfect.
Hey,
No.
and really quick, I just wanted to add, I'm going to give you a little tidbit of why you use a credit repair company as opposed to trying to do this thing yourself. One of the things, and just what the question that was just asked kind of rung the bell for me on this. And I'll give you a credit repair insider tip for the listeners. A lot of my customers will call me and they'll say, hey, Sean, guess what? I'm trying to help you out here as you're going through your credit repair. I had this collection account. I just paid it. And I said, you did what? I said, I just paid it. So that's going to help, right? I just paid this account. So now this collection's all paid off. So that should help you, right? No. Paid collections do absolutely nothing for your credit report. Okay. So if you have a collection on your credit report, let us remove it. Don't pay it unless you can get certifiable documentation from that creditor that if you pay this debt, they will take it off your credit report. If you don't get that documentation before you make that payment, the only thing that's going to happen is the credit collection account is still going to stay on your credit report. It's only going to have a paid notation on it as opposed to a balance. So you just paid a collection that we could have removed. You spent money that we could have removed for you. And the only thing that it has done is changed it from you owing $300 to now this collection is paid. Guess what? No score increase. It's still sitting on your credit for everybody to see. So that is why instead of doing things on your own, you hire someone like me or Christine who knows the intricacies of credit repair and credit removal. That is one of the biggest mistakes that I see time and time again from my credit repair customers. They're thinking that, oh, well, I'm going to help you out. I see this here. I'm going to go ahead and pay it. And they without even calling me, they just go in and, hey, I want to pay this collection. They get a call, like Christine said, they start seeing things removed. The collection agency starts their collection activity again. They call them up and they say, hey, you still owe us $300. And they think, oh, well, yeah, Sean must be doing something. He's doing something with my credit. Okay, I'll pay it. They whip out their credit card and they pay it. Oh, no. And you know what I say? When I see that, I get a text message. Most times it's a text message from my customers, and it says, hey, Sean, CSC Collection just called me. I paid off that old Capital One card, $300. I gave them $300. Or they say, I settled for $150. They took it. So we should be good, right? And I sent them back a big no.
So hey, Sean, I remember I had a utility bill that had fell on there. I was like, Sean, what do I do, man? I want them to pay. I got the money.
Yep.
What do I need to do? And he said, no, don't touch it. So, like me personally, Sean and Chris, I'm not like a big do it yourself. I'd rather go to an expert that's highly qualified. I know you could cut your own grass if you want to. You could change your own tire. You could do your own tune up. But I know I'm not a mechanic. I know I'm not a credit repair specialist. I'm a real estate investor. I'm a wholesaler. We buy cash and we turn around, we flip, and that's what we do. I know Sean has literally changed my life overnight, but it was not an overnight process. This is delayed gratification. It's not instant gratification. So you do have to be patient, and you do need to communicate with your credit repair specialist.
Absolutely. Credit is long term and people make hiccups, but I'm glad we have you guys to refer to people because I'm a realtor and it's enough in real estate alone where I try to focus on real estate alone and okay, I know somebody who could do this. I know someone who could give you a loan, but it is enough information where you should, like you said, give the information, give people the information to the right people.
Yeah, and that's what my nonprofit organization is about. I'm the
Mm.
president and founder of it, and it's all about information, relationships, and resources. And the people that's here, that's on the panel, can definitely point you in the right direction. Whoever you decide to go with, we just want to be as transparent as much as possible and give back predominantly here to the African American community, and as well with other minorities that are not aware about the opportunities that they have available to them. So right now, with me being in real estate, this actually took me to the next level. Now I have access to hard money lenders, private money lenders. I
Mm-hmm.
can go get a line of credit. I mean, the available capital that's available to me is in abundance right now. So the only thing I have to do is just maintain my credit, keep improving, keep generating revenue, keep accessing assets and collateral, and the universe is definitely in abundance.
All right. And before we go, Chris, can you please tell our viewers where they can find you and give them your social media information as well, please?
Okay, so you can find us at creditdoneright.com, online like that. And you can also find us on Facebook at creditdoneright.com. So you can also reach out to me. I will give you my cell phone number at 210-274-1580. I can help you with the credit part. I can talk with you about mortgage. I can do whatever it takes to help you make a plan to get you into a home, because you know what, there are small limits, guys. You have to understand out there, if you want a house, we can get you there. We can make a plan. We can get you there. There is so many programs out there. You can get a house. You can get a home. You can do that. We just have to make a plan.
Okay. And Sean, can you please give us your information as well, sir?
Sure. My name is Sean Smith Pickett. You can look me up on Facebook, Sean Smith Pickett, or you can reach me at our website, which is www.firstchoicefi.net. So FIRSTCHOICE, FINANCIAL.net.
Mm-hmm.
Or you can reach me by cell, 952-465-9354. Again, 952-465-9354. I offer a whole credit Swiss of credit repair. I also help with the home buying process. Like I said, I have over 16 years in the mortgage industry. I'm currently a mortgage underwriter. So that's all I do is approve people and deny people for home loans all day. And I'd love to earn your business.
Okay. Thank you both so much. Again, this is Ashley Smith. You can find me at Ashley CTX Realtor on Facebook, Instagram, noblegrouprealty.com. And where can they find you, Eugene?
Eugene Alexander on Facebook, 5hillsinvestors.com, the number 5 spelled out, FIVE, Hills, HILLS, investors, INVESTORS.com. My email is Eugene at 5hillsinvestors.com. We want to thank you for tuning in here to the Ready Fire Aim podcast because the universe rewards action takers. So as long as you have the right leadership, the right team, the information, relationships, and resources, go ahead and take action, and the universe will reward you. All right. Well, thank you for your time. Errol said excellent information. Thank you, Sean. Thank you, Chris. We appreciate your time. We know how valuable it is, and we appreciate you adding value here to our Central Texas community and as well all over the world, because our last podcast we did, we had people from
Afghanistan, Iraq, like everywhere. So we're giving this information out. Sign up on Eventbrite. We also put this information on YouTube, and I'll make sure that both of our panelists get it as well. And that's all I have to say. Thank you, everyone. Have a good week. Have a productive week.
All right, amazing. All right, later, guys. Peace.
All right, bye. Thank you.